Liability, really important consideration. Again, you're working hard, we're hopefully making money, we're hopefully going to have success in business. We want to make sure that that success turns into dollars in your pocket and for your family. If you're running a sole proprietorship or general partnership, you have personal direct liability. There's no wall between you and your business. Okay, so that's a really important distinction. If you're running your business through a limited liability, LLC, a limited liability company, or a corporation, okay, you do have some liability protections. So that's an advantage that some people feel is really important, that you put a buffer in between you. And that's an advantage with an LLC or a corporation. A disadvantage may be that's more formal, and we'll get into all that stuff, but this is really important. However, it's not absolute. And some people believe that they have their LLC and they're completely bulletproof from any kind of liability. It's not true, and we'll get into that a little bit down the road. Taxes, I'm not going to go deep into the tax side, but suffice to say, when you run a business, one of the important people in your lives is your accountant. So all of you that have businesses, and your financial person too, so your wealth management person, but your accountant. So make sure you get a relationship with a financial person, because one, you need to make sure that you get your books and records set up properly, okay, so that that goes back to liability, because we don't want to be commingling assets and things of that nature. But make sure you're getting your financials set up properly, but also so that you're making proper tax elections. And one of the things you probably will see a lot, and maybe have heard of or will hear of, is S-corporation, which is a thing that I hear so much confusion around. Oh, I'm an S-corp. And an S-corporation versus a C-corporation, they're tax elections. They're tax treatment provisions for federal purposes that may impact your business, okay? And you'll want to think about whether or not your organization is a pass-through organization. So like an S-corporation or a partnership, they're pass-through, meaning the entity doesn't pay taxes, but rather all the monies, hopefully, that you're making pass directly through to you as the owners, and you pay tax at that level. Or if, for example, you're a C corporation and the corporation itself is actually paying taxes at that level, at a corporate tax level, and then when you make monies pass through to you as the owners, when and if you do that, make dividends, then there's a tax at that level.